Hi, I wanted to show you a couple of articles that 100% confirm what a lot of us have been saying for a long time, that the stock market is a rigged casino that's only held up by the literal injection of trillions of dollars by the Federal Reserve and other central banks. Okay, so real quickly, I've never heard of this Nevsky Capital until today, but this article summarizes it real quickly. Why 1.5 billion Nevsky Capital is shutting down. The full letter. As noted moments ago, the iconic $1.5 billion Nevsky Capital is calling it quits. What is surprising is that unlike some one-hit wonder hedge fund wannabe, Nevsky is actually a brand name in the hedge fund community, as demonstrated by the following performance charts. So you got a big-time hedge fund calling it quits, shutting the doors, and here is from their letter why they are doing so. The thrill of analyzing economic data releases and company accounts is no longer enjoyable. It is therefore time to accept that what we have done has worked brilliantly for 20 years, but does not work anymore, and move on. For the laws of economics will never be repealed, but for now they are suspended and may be for some time. An indefinite period involving intermediate levels of risk during which we think it would be wrong for us to be the stewards of your money. So they're saying we don't want any part of this anymore because the fundamentals of economics are no longer in play, which is exactly what Bank of America said recently as well. Bank of America explains how central banks rigged and manipulated the market, and they sent this out to their clients, and it's real small, but I'll put it below so you can see it, but I'll read to you just this highlighted part. Essentially, central banks, by unfairly inflating asset prices, have compressed risk like a spring to unfairly tight levels. Unfortunately, the market is aware the price of risk is not correct, but they can't fight it, and everyone is forced to crowd into the same trade. By manipulating markets, they have also reduced investors' inherent conviction by rendering fundamentals less relevant. See, economic fundamentals are no longer in play with this stuff. It's just a matter of the Fed inflating the stock market slash asset stock prices, whatever you want to call it. And so then Bank of America went even further and said it's coming to a head in 2016. Why Bank of America thinks the probability of a Chinese crisis is 100%, and then the rest of the world will follow. Every year, including myself, I have been wrong. You betcha. I made a prediction like everybody else did, and we all fell flat on our faces. But here's the thing. Every year this continues to go on is a slap in everybody's face, and everybody should be getting a lot more pissed off than what they are. It's ridiculous. Every day this is allowed to continue is another day that you are robbed blatantly in front of your face. The Chinese stock market crashed 7% yesterday, and it was falling so hard that they had these things called circuit breakers where they shut down the market. They said, well, yeah, sell off, big time sell off. We don't like it, so we're going to go ahead and shut the market down. That's bullshit. The thing that's different about this year and every year that's coming here on out, no one's going to pay $100 for a stock in a company that is laying off 90% of its labor force and shutting down all of its stores across the country. No one's going to do that. Even the dumbest and the dummies are going to say, well, that's crazy. Why would I have to pay $100 for a stock in Walmart when last year their whole company fell like 80% in sales or whatever? The sham is up. It really is. And now you have Bank of America, for the love of Pete, they're even saying it. Fundamentals no longer exist. It's about free money. All the stock market is a bet on the next bank bailout. That's all it is. Okay. Thank you to my subscribers for watching. Links will be below.